Good morning, guys. Sorry. Okay, so overnight things changed somewhat. From a fundamental point of view, there was no major news, no macro data. Alphabet earnings were announced, as that's the owner of Google, as did Microsoft, also announced, and they both beat expectations, which is not surprising considering the year they've had and all the negative press and interest rates rising. You'd expect them to say their earnings are only like 100 mil and then beat that. Certainly the stock market has beaten that. But things reversed pretty much after the market close. US dollar reversed somewhat. Chinese announced a stimulus package, but didn't really tell us much as how that was going to work. But on the back of that stimulus package, we saw the commodity markets outperform, and therefore the Aussie dollar was probably one of the strongest currencies in the last session. But everybody's waiting for the FOMC, yeah. So that's only less than 24 hours away now. So we're about 20 hours from it to come out. But before that, we'll get the Aussie inflation data, and that might change the picture on the Aussie somewhat. Interesting chart here is that this red line is the US interest rate market, the Fed funds target rate, the upper side of that. And as we can see, when it was back at sort of around 1.25% or 1%, financial conditions were around the 99 mark, and financial conditions tightened as interest rates rose. But then when it got to 4%, the financial conditions started to ease somewhat, even though we had this little banking crisis at the start of the year, and interest rates continued to rise. We've seen financial conditions continue to be easier, which is an odd situation, and whether or not how the Fed's going to play with that. Odds of interest rate rise in 20 hours time from the Fed is pretty much locked and loaded. But interestingly, for the last month, with the data coming out of the US as being inflation coming off, economy still quite strong, people were talking about a soft landing and looking for rates to peak at July, so peak tomorrow, and then come off in early next year, January, February next year. That situation is starting to change again, and the odds of another interest rate hike before the end of the year is starting to creep up towards the 50% mark. So, things are a little odd at the moment, and that's pretty natural to come as you're coming into such a major meeting as the FOMC. So we see US bonds on the weekend gap down and try and backfill that gap in. We see the longer end of the bond market weaker pretty much after the close of US stocks, but up on the day as it sort of starts to push into 4%. Then we see US stock market. Right? So on the day it finished higher at the close of yesterday's session, almost not a record high, but it's certainly the highest point it's been this year, and has come off aftermarket. I'm not sure who announced aftermarket, but before the market we had Alphabet and Microsoft, which both beat, and so we see the Nasdaq doing pretty well until, again, aftermarket. There must have been an announcement or another stock announcement that's reversed all of that. Dollar index has come off a little bit, as we can see from on a daily basis. It's down minor, tried to reach up and fill that gap in, certainly got to this one, filled that gap in nicely. And the world's not perfect, it's not going to hit your horizontal perfectly. Another day of selling and we might see that reverse, but I'd be careful this close to FOMC taking out a position and being in it, having exposure to the FOMC. Yen didn't get to 142, just shy of it. It's been getting a little stronger recently. Cable did all right. Well, that's more about US dollar weakness. Euro sideways. We look at that, look at the hourly, it's pretty much just gone sideways. Not much change there. And then Aussie dollar, as we can see off the back of that Chinese news, had a very strong session. And if we look at the Aussie dollar across all crosses, or across the majors anyway, let me bring that across for you. Put it all on the same time frame, daily. So against the US beat, against the yen it beat, against the Kiwi it beat, against the CAD it was stronger, clearly stronger against the euro, and also stronger against the pound. So Aussie was the strongest currency there in the last session. That might change with inflation today, and also FOMC coming up in 20 short hours. So trade accordingly, trade carefully, stay safe, and we will discuss the FOMC tomorrow morning. Cheers.